Welcome to Disambiguation. I'm your host, Michael Fawcett. Each week, we interview experts in artificial intelligence, generative AI, and business automation to help business leaders understand how to use these tools for the biggest business impact. So today we're going to take a look at the vertical use case in AI. And if you've watched the show, or especially the AI Pulse episodes over the last few months, you've seen us talk more and more about the fact that more companies are looking at applying AI in a much deeper, narrower way around a specific vertical because the use case is much more impactful. So today, we're going to take a look at an insurance company in Spain that has really transformed their go-to-market underwriting and claims. And as you see, I'm joined by Juan Garcia, who's a co-founder at Tuio. Juan, welcome.
Welcome. Thank you for having me.
I appreciate you joining, and I'm looking forward to the conversation. It is certainly a hot topic. Why don't you just give us a quick introduction and tell us a little bit about Tuio and how you guys got here?
Right. As you said, I'm one of the co-founders of Tuio. We're three co-founders. We started Tuio 2021. On my background a little bit, I am an engineer by trade. I used to work for Cisco for a while, for a few years in the telecommunications industry. At a certain point, I just realized that the fact that you could actually push a button and it worked or it didn't, and it basically hung over you with like the Damocles spear, that didn't seem to fit me very well. So I did an MBA and I worked in strategy for a while. And after a while, one of the things that was having my interest was building something of my own. And I had built Orange Insurance. Orange is a telecommunications company here in southern Europe. It's based in France, but I was working for its Spain subdivision, and we were building Orange Insurance. One of the things that I understood was that technology was going to play a big part in transforming that industry. That was 2019. And it wasn't even at the point of the Gen AI revolution. So it's even playing technology was going to have a lot of impact in that industry. And yeah, I decided I was in contact with some friends that at the same time were looking at starting something as well. And that was my two co-founders, Jose Maria and Aziz, and they came with this pitch that was Tuio. That was a new type of insurance company that would leverage technology to do things, I don't know, better. I feel different. And yeah, there's 5 years later, here we are. We are about 100,000. We have 100,000 customers, 15 million euros in revenue every year. And yeah, very happy where we are. We're an insurance company that we're focusing on personal lines. We do homeowners insurance. That was our first product. We thought that was the best way of starting learning and applying technology into doing things differently. Because when you look at the different lines, homeowners insurance has about 50% margin after claims. If you look at auto, that's only like 15% or 20%. So you have a bit more leeway to do things a bit different and maybe make mistakes, and it won't break your result for the year. But auto can do that very easily. So we started with homeowners, then we bring term life, which is not really a personal line, but it's very close to homeowners because of the mortgages and everything, at least here in Europe. And then pet health, that was another one that worked for us. And we're about to launch auto in the coming month. And probably second half of the year, we'll look at travel as well. So that's what we are. That's what we do. We're currently based in Spain. Only, and we're looking to expanding internationally, and we'll probably talk about that in the program.
Yeah, I got a few questions about that later on. I was thinking about this, and I've been involved in a lot of startups too. So as I think about the way I go into this, usually I'm looking for some obvious problem or set of problems that I think we can do differently. And I'm curious for you, what did you see happening in the insurance industry that let you believe there was a market need there that you could approach in a completely new way rather than kind of the traditional, we're going to do some incremental improvements over time, with the existing kind of approach.
So one of the things that we saw was that insurance companies tend to have this universalist view that they do have one product. They believe that everybody can purchase that product, and which
Mm,
is true actually. But then if you look at it from like the more of technology or let's say a startup way of we start thinking, we started with a segment and we realized that people aged from 25 to 55, and that's not an exact cohort. It's just like a
mm,
proxy of people that youngish on the younger side. And we saw that this segment is a problem in two ways for the industry. They're a problem because they feel they're underserved. So this type of people, they're
mm,
used to consuming content through Netflix. They're used to purchasing stuff through Amazon. They even do groceries online,
mhm,
and they, at least here in Southern Europe, they couldn't see a value proposition for an insurance company that would fit on that way of doing things. So that's one of the things. And also then when you start
mm,
looking at that segment from the industry perspective, you see that on an industry side, people from 55 and above, they tend to be very profitable at those age cohorts. They don't use the product as much. They're happy to pay larger premiums because they feel the price is a signal of quality.
mm,
They have all these behaviors that make them very profitable from the insurance industry. When you look
mm,
at 55 and below, you see that it's a completely different world. This segment, they tend to be online way more. They tend to compare more, and not only on price, which they do. We all browse on price comparison websites, and that put a lot of pressure on top line on revenue. But also they tend to have more financial literacy. So
mm,
you know more the type of product that you're buying. You know which coverage are included, which ones are not. So you don't need as much hand holding from the industry. But
mm,
also the fact that you know what you're buying then makes it that we tend to use it more because you know what you purchase, you know what's covered, and if you have a claim, you just use the product more. Which, don't get me wrong, it's what it's the product it's for, but it's not the same thing. So this segment has a problem of they don't see a product that they feel it's for them, but
mm,
also then they are not very profitable. So that makes the industry not look at them very happily and try
mm,
to develop a new product. So we saw these two levers, this two-sided problem, and it's like, oh, there's something here for us, and we had this insight that the key to serve these customers was providing them access to this insurance piece, which a self-service digital first platform, and then deploy AI to just lower cost to serve, which make it
mm.
profitable, but also make better decisions and serve them in a way that they see themselves reflected, their preferences.
Yeah. I mean, that makes sense. And I know I've written a lot and seen a lot in research over the last, 10, 15 years that say, people more and more are looking for best fit kind of offerings, really tailored to them and not just kind of one size fits all, which was apparently the approach in insurance as well as a lot of other industries. So that really does fit with that idea that you can deliver a much better experience in a much more personalized way. And that would in fact be much more attractive. And in fact, we talked a little bit about when we were talking about setting the show up the fact that you're taking a digital first approach in insurance in Spain and that you've seen profit margins 3x the industry average. So can you give us a little bit of an idea of what you saw in the traditional market that made you think there was real opportunity here? And then you already mentioned the segments, that sort of loose segmentation of 25 to 55 demographic, but give us a little bit more around that.
Sure. You started to see a lot of companies in the US coming up. Probably your audience, I'm sure they are aware of Lemonade, which was a big
Yep.
inspiration for us, or Hippo, and they were proving that you could do things a bit differently from what was used to be done, and be a
Mhm.
great company and compete with existing players. So we saw that. So that was a big inspiration as well. Continue. And also we saw that what we thought was a problem was indeed a problem. When you're
Mm,
looking at the cohorts, the penetration of insurance per cohort, you see
mm,
from millennials to baby boomers, it's a reduction of 50% penetration. I think
mm,
Gen X is somewhere in between the two of them. I think it was
mm,
30%, 30%. reduction in penetration. So you definitely see that there's a problem there, and everybody needs insurance still. What we didn't have the actual solution for that. We thought there was um, enough data points to believe that something different, something fully
Mm.
digital, something remote, and something direct would work for for this segment, because it was working in other countries. It was working in other industries. For example, we mentioned before the Netflixes of the world and the Amazons of the world. So
Right.
we didn't have the actual solution. I don't think, and I want to think this about one of the things that I think about entrepreneurship is that when you're doing something new, unless you are in the market and you see people is purchasing your product, you wouldn't have the certainty that your solution is the one that's going to be accepted, right?
Sure.
After a while, we just need to jump and then see if it worked, and hope thankfully it did.
Yeah. Well, and I mean, this sounds like from the from a business approach, a shift really that says rather than trying to squeeze the last bit of margin out by increasing efficiency, you can really start to shift into a focus around better AI enabled decision making. So I'm curious about that too. Like, what made you see the shift from just focus operational efficiency to something that was more aligned with using those tools, in practice to really make a difference in the business based on better decisions.
So this is an insight that only came about 2 years ago, like mid 2024. Before
Mm,
that, we were like everybody else, just following the pure cost efficiency, and because that's
yeah,
basically automation, like previous automation technologies. Don't get me wrong, AI is not only an automation technology, but
right.
previous automation technologies are what they've taught us that you just need you just chase pure cost efficiency, and
Mm,
the thing with insurance, and that's probably why we made that step, and the way we looked at it is if you look at cost efficiency, from all your cost base, uh, cost to serve is just 10% of that. So it's just not a lot.
mm,
Even if you can reduce it by 50%, which is a big leap of faith, you would only get like 5 percentage points of margin more from all that
mm,
investment. So, I mean, it helps, but it's not a game changing type of investment. But when
right.
you look at the total cost of claims and you look at marketing, it's about 85% of your cost base, or cost slash investment
Mm,
base. So if you just get 10%, which is easily attainable with Gen AI or different technologies, you're looking
mhm,
at almost like 8.5 or almost 10% improvement in profit margin. So to us, it was more of a thing about, so how can we do this better? And then now it seems that it's just it's like this big eyeball moment, and we seem so smart, but we were not. We were just looking at it from a very analytical perspective. Like, so if we do this, then we get 5 percentage points. If we do this, we may get 10 or more. So it's just like let's
mm,
chase let's chase that better decision making towards where it may take us. And for us now, we talk about three different levers, which is growing more efficiently. Um, that means marketing basically.
mm,
Underwriting is smarter, and which impacts all your value chain, because underwriting impacts
right.
the type of customers that you want, impacts the price you put. You are able to extract from those customers, and then also informs better your claims process. So underwriting is along all the value chain, and then
Right.
managing claims more effectively was the third lever that we were looking at,
Mm.
when we were looking at this shift in cost efficiency towards better decisions.
Mm. And I mean, that's a very comprehensive approach when you think of the insurance business, right? You get customers, make sure you've gotten the right customer, make sure you're pricing things correctly, and then in the end, make sure you deliver the kind of service that keeps them and at the same time is efficient. And I mean, that's different than what we see from a lot of industries through the years that have tried to take AI and push it into their current process versus the opposite, which sounds like what you did is look at the opposite, approach this by re-engineering the workflow to be AI native from the start. So for you, what does that actually mean? I mean, how did how did you have to tear this down and kind of rebuild this in this AI native concept?
Sure. As you said, we just didn't bolt AI into an existing insurer, because that I wouldn't say it won't work, but I think it won't get you as far as rethinking all the processes and systems as you
Mm.
should, because AI is such a game changer to us, at least. It's such a game changing technology. It's probably one of the initial ones that actually enables you to have a lower cost base, but also improve customer satisfaction. So that's also different in that sense. But anyway,
Yeah.
I'm just digressing a little bit.
Mm.
So what we did is just like we started, and that was Jose Maria, which is great at conceptualizing things. One of my co-founders, he used to be a strategy consultant at BCG, so it's really
Mhm.
good at that. We basically we started thinking about the company as a whole, and we started thinking about a company as a stack. As you would think stack would mean technology stack, but we started thinking about a company, complete company as a stack, and to achieve those three goals, those three levers that we wanted to move, and humans were now part of the stack. It's just like that only where they actually added value. So
Mm.
everything we started thinking about agents and the workflows and APIs and all sitting on top of a unified data and process layer. And that's the way we started thinking about all of that. So it's like there's this process layer, there's this data layer, which is at the very bottom, then process layer. And then on that process layer, there's this APIs and agents and humans are working on those APIs, which can be presented as a platform or as an app, or can be
Mm.
presented as an API, and it depends who consumes it, if it's an agent or a person. And when you start thinking about that, then you just realize that if you put the data layer and that API layer and the interaction layer at the very at the center, then you just redesign your processes, and then everything changes. And when you continue, when you all that, it seems very technical, but it's not really. It's just like it changes when you how you think about your company. Then you
Yeah.
get a completely different P&L. And as you said, we are currently homeowners insurance, which is the one that we've been doing the longest. On average, in Spain has 5% profit margin, and now we're currently operating at 15%, and
Mm.
we hope by the end of the year we'll be at 18%. And it's just because um, we look at it as a whole. Instead, this is not like a bunch of disjointed projects or pilots that impact different operational KPIs. This is just a redesign on the way we do things, insurance. And what's neat about our case, I think, this for me when I'm explaining to your audience, is that we were able to move from oh, we're impacting these operating KPIs, and now we can show very clearly how all these efforts are impacting
Mm.
the P&L and how it's just being better.
Yeah. Yeah, I mean, it really fits into this idea of digital workforce and hybrid workforce, right? So it's how do I build a platform that enables the agents and the humans to collaborate both to each other and in among their own cohorts, right? So the human to agent to agent. All those things are important when you think about redoing the process, so that it does use all those capabilities. Now, you mentioned integrations, and I know we talked a bit about your marketing team before, and I'm really interested in how you built internal, using MCP, built integrations that pull data from the platforms and then generate this insight for your marketing team weekly. So can you talk us through that? Because I mean, you told me it led to something like a 40% improvement in conversion, and I mean, that's fantastic. So I know the audience would love to hear you talk a little bit about how you got there.
Sure. One of those things that I have to brief is that we are silly a little bit in the way we name our agents, because we think they have to have names as well. So all our agents have names, and then some of them are sillier, some of them make sense, some of them don't. It depends on who is actually building the agent. So Atum is our growth AI. Atom, for those that are my age, pushing 40 now, it's from the manga Captain Tsubasa, which is it's Oliver Atom. He used to be the one scoring all the goals, so that's why he's doing the marketing for us. And I don't know if it makes much sense, but it's the way it is. So he's the growth
No, it does.
agent.
I name all my agents too, by the way. So that so I'm with you.
Awesome, awesome. So as you said, he automates all the heavy lifting from the digital marketing optimization that we do. It's what we believe is that what used to take teams ages, now it just can happen daily, or as you said, weekly, because we found weekly is the best cadence for us to do optimization. So as you said, we built this MCP. We connect to all the main sorry, the main ad platforms. This is Google,
Hmm.
this is Meta, this is all of them. And what we build is a next best action machine, and you will hear me talk about NBA machines all the time, because that's one big insight that we had, that Gen AI works very well, just pulling all the data from one place and analyzing, and then doing recommendations. And that's the way we work with it a lot. So as I said, it pulls the data from the ad platforms, and it generates insights through prompting. So it identifies waste keywords, some small subsets of keywords that are not working very well, or something that we're doing we shouldn't be doing. We hadn't negated informational keywords, and we just want conversion keywords. So it's a lot of work around optimizing what's already there. Also, the structure of the campaigns. If there's a campaign that's not working very well, it tries to figure out why. So there's all these, what used to be day-to-day work of the optimization of your marketing to make sure that your ad expenditure would bring the most customers. Now he does it for us. Um, and this is another concept that we've developed, that is the confidence of his suggestions. Some of the suggestions, either they are high confidence, the machine has high confidence on those suggestions, or are low impact. We let them do it itself. Um, so yeah, what we've done with this machine is we've turned marketing into an always on optimization loop. So
Mm.
it performs these analysis weekly, end to end. It gets all the campaigns and all the key metrics and all the ads and landing pages, and so basically he sees all the marketing end to end, from when someone sees our ad to when he becomes a customer. Um, and then tries to optimize through all the stages. And as you said, and it was these are from when we set it up to 2 months after that, we got see the conversion ratio around 40% plus, and that's probably mostly because you just got rid of all the informational keywords. You were just paying for ads to people that weren't inclined to buy. So it's like, why are you paying for
Mm.
ads for that? So that's a lot of. It's not, as I said, as you said, it's about making better decisions. Why are you paying for these keywords if they're not bringing customers, right?
Right.
You may as well only pay for the keywords that bring more customers, or at least, or even invest more in those keywords. So just removing those improve 40% our click through ratio, and
Mm.
also the total conversion towards when you had to get a click to when someone sees a price with us is 60% improvement.
Mm. Yeah, I mean that's great. I mean, it really is about using that information to focus in and be much more studied and approach that with intent. That really does optimize it versus kind of this shotgun blast approach that a lot of marketing teams have used in the past, right? That's yeah, that's interesting. And I know in underwriting, one of the things, and this doesn't surprise me because I'm an Apple user, but I know you told me that you're in AI, using AI in the underwriting world, you discovered that Apple users cost are higher cost claims than Android users, and you use that to optimize your pricing. So how did you build a system that would surface that, first of all, and then use that to build a much more personalized pricing scheme in the marketplace?
I am an Apple user, by the way, so I'm actually throwing stones to my own roof, as we say
No,
here in
no, I get.
Spain. And so it all started with data. We had this insight at the very beginning, even when Aziz, my other co-founder, who's the one that deals mostly with data and technology, he said that AI, and we were talking about 2021, AI existed, but it's called machine learning. And if it's called AI, it's only on PowerPoint. That's something that he used to say to tease Jose Maria a lot.
Yeah.
So yeah, we started gathering all the data that we could, and we built from every person that comes through our platform. We built what we call the customer DNA, and we get all these non-traditional data points in the hundreds, and we build it through across every digital interaction on our onboarding. We gather all this his site navigation on our ecosystem. We get all this claims data if he's an existing customer. We enrich it with third-party sources, also some social login, social data, and when you look at that and you look at the 20 property data points that a normal agent would or a normal insurer would get from an agent, then you see there's this huge difference in one thing or the other. So through all this customer data, then you start looking into patterns, right? You start looking into things that may help you discern who's a better customer than other, because it's always in relative terms. So for example, yeah, we saw that that if you were navigating or purchasing your insurance through an Apple phone or a MacBook laptop, then you tend to whenever that went to having a claim, then or having your laptop stolen or your iPhone stolen, and those claims tend to be on average of higher cost than an Apple on Android phone or a normal Windows laptop.
Right.
So that's something that, to close the loop, you just plug into your pricing machine, pricing engine, because it wouldn't be fair of those customers to be subsidized by customers that tend to be on average of a lower cost in their claims. And that's one of the things. And we have some other examples that we can share. For example, whenever you have a customer that's browsing your website and it's navigating and starts his purchasing process, and he goes click, click, click very fast in all process, and then he stops. He starts reading one coverage very carefully, more often than, and then purchases his insurance piece. More often than not, there's something wrong with the customer, and what we do is we flag it.
Mm,
We don't plug it in his pricing, but we plug it and we raise a flag and we notify at every interaction that we have with a customer. For example, if he has a claim or anything, there's this
right.
flag. Oh, this customer read, for example, water damages. He didn't read anything, but he read water damages very carefully. And more often than not, what you see is that that same customer in the following week to his policy start, then he magically has a claim on water damage, and then you start to look at that water damage claim very
Mm,
closely, and then that is not reflected on price, but it's reflected in your cost of claims, and that's better
right.
decision making because you have more data and more inputs to just gather to just figure out how to treat that claim.
Yeah, it's tied to behavioral clues, which I've talked about quite a lot over the last few years. The capability to use behavioral clues to make some business decision, whatever that might be tied to, whether it's pricing or claims or whatever. That's really interesting to hear in practice how that would work for you. Although I will say, as an Apple user, I'm fine if the Android users subsidize me. I don't have a problem with that. In case you were curious.
Yeah,
Um,
he's not gonna be. He's also an Android user as well, so he's not gonna agree with that.
Yeah, right. Yeah. So we talked about claims a little bit too, and I know as an example of this hybrid workflow, hybrid workforce that we talked about, this is kind of a good way to show, I think, the fact that you use AI to manage the workflow and provide next best action to your adjusters, but then the adjuster actually makes that decision to accept or refuse the recommendation. So that's different than perhaps the way that we've looked at that human AI relationship in the past with a lot of companies, at least. How did you get there? And what did how did that change for your adjusters, and how did they receive it?
That's a lot to unpack there. So
It's a big question.
yeah, yeah. So it all started from our claim process. The way customer files a claim for us, it's very digital. So he records a video assessment and maybe asks pictures and then answers a few questions on what happened. So and that's when he files a claim, right? So the one thing that we started figuring out when we started is that a claim, as opposed to other processes, doesn't really follow a straight line. It's not very deterministic. It branches out, and it depends on coverage, depends on the severity of the claim, it depends on the fraud signals that you can actually gather from your interactions with the customer. It also in third parties, because here in Spain we don't reimburse as much as in other countries. We actually go send plumbers and painters and everything to fix the actual issue. So it's a bit different. So that also comes into play, and that diverges as well on the term. Then also even the adjusters and the experts, the same, a given expert might see two claims very differently depending on the way he woke up, or even, I don't know, even some silly
Yeah,
thing he
right.
didn't like the customer, his interaction or whatever, or even two very similar claims would be completely treated completely differently by two different adjusters, because I mean, the human person, I mean, we all are like that, right? We all have our cognitive
Right.
biases, our personalities, and everything else. So what we figure out is that Gen AI is really well suited to automate very non-deterministic processes. And that's when we started to play with it for claims. So as I said, for us, a claim starts digitally with the video and the images. Then Watson, as we call this agent, and the one that actually goes and investigates on the claim, um, it enriches with customer history, the policy data, all the manuals as we want all the claims to be. We've built manuals on how we want claims to be treated and standard prices and valuations and things like that. Then it also plugs the navigation patterns of the customer, or even atmospheric data is if it's suitable for that one. And we basically we are able to never look at a claim in isolation. It compares to past behavior or similar claims that we've had, or even external signals, right? So what it does when we get all that information, that for a person to just run through all that information, even just gather the information and then run through all of it would take maybe days. It
Yeah.
does it very. I mean, it's AI. It does it very fastly. So it then runs some analysis. It runs the severity analysis to see if it's very urgent or not, for example, or very severe. For example, a fire, if it's finished, might not be very urgent, but it's very severe probably.
Right.
Then it runs an urgency analysis. On the other hand, if you just lost your keys, it's not very severe, but it's very urgent because you're just waiting on your door to just get into your house. So it takes that into account to just make better, or at least make suggestions on how you would take decisions. And it also looks, and this is one thing that we found actually, um, when you look at all the data of different claims, we see patterns and we see several type of claims that gets duplicated. And then you figure out, and then you see maybe these customers are related and it's fraud, and you see all these different things, right? So when we look at all these things, then suggest actions, but also suggest the confidence level that
Mm,
he's got on those actions,
right.
and some actions like updating reserves. Reserves are the value that you expect that this claim is going to cost the company. That's the reserve. It's not an actual value, but it's what you expect. Is like a provision in a way. So updating these reserves or scheduling repairs are very easier to automate since they are not as critical, or they don't impact the customer as much. And what we do is we can automate if it has somewhere in between 70 to 90 confidence. But then, for example, a payout or a rejection, we have, even if it's 100% confidence, we've
Mm,
decided that we don't want to automate it. I mean, because if you think about it, when a customer, I'm not saying that he's committing fraud or anything, but if he's gonna have his claim rejected, he's in a very vulnerable situation. So I mean, a little bit
right.
of empathy, even if his claim is not covered, always, I mean, it goes a long way. It's just keeping the
Sure.
trust of that customer. So we've decided that anything that has to do with like money um or rejections, we just do it. There's always a person doing it, and yeah.
Mm,
Anyway, I'm digressing a little bit. So the decisions are made. Um, Watson presented to the adjuster, and the adjuster can go through it and see all the different confidences and see. He can actually go to the original data files. For example, he can watch the video if he decides.
mm,
So he sees all that, and then he can accept or he can refuse the actions of I mean the suggestions of Watson. And but one thing that we found is very powerful is that if an adjuster decides to reject the suggestions, he has to actually write down why he rejects it and what he's going to be suggesting, like what are his decisions. And so we can compare, and then we can actually improve the machine, and then we plug that in, and it's like, oh, if you see these, then maybe you need to look at all these things as well, because I mean maybe you missed
mm,
it. And we plug that into all the different. We can plug into the manuals, or we can plug into the prompting, or even we can plug into the memory. So it's a continuously improvement NBA machine. That's what we've done.
mm,
And yeah, what we found is that if everything is just runs naturally, it's not an edge case, then we can automate quite a bit of the work, and the adjusters are happy because I mean,
mm.
all the grunt work it's levered by the machine, and we tend to have the humans supervise all the edge cases and those um, those actions that we don't want the machine to do.
Yeah. I mean, that's a great example of this hybrid workforce and how you can see the push and pull between machine and human and back. That fits well with how I see this work in a lot of companies. One of the things that I know, you mentioned something about highly contextualized solutions. And up front we talked about the fact that the world seems to be moving more and more towards vertical versus these kind of horizontal systems. So process aware AI matters more than horizontal tools. I mean, why do you think that is, especially in regulated industries like insurance?
I think, and it touches a little bit of what we discussed before. Just plugging horizontal AI towards your existing processes. I mean, it will get you something, but it will get you only so
Right.
far. And just because you need to contextualize to your company or even re-engineer your processes, that makes it vertical approach is just way more powerful because you need to make the technology context aware. That's where the real results come, and we are a good example of that because we
Yeah.
didn't take ChatGPT or whatever LLM we're using to build Watson and Atom and just give it to the person and have him talk with it. We just re-engineer our process to make sure that the machine is at the center, the technology is at the center, and then we are all in a way tools of that machine, right? Of that technology, and I
Mm.
think that's where most of the value from AI is gonna come from these very contextualized custom-made solutions. So that's why I tend to believe that vertical solutions in a first step towards that image that I have, it's
Mm.
probably a better approach than horizontal tools that let's say plug a process into the machine without context of the industry that's going to be working for, or at
Yeah.
least, I mean, you can use those, but then you're going to have a lot of customization in the terms of
Yeah.
of the end customer.
Yeah, I mean, it just seemed that the more you can tie this to specific workflows, which are industry driven, the better outcomes you're going to get because of that. So that ties really well, I think, into that message of go deeper in a more narrow way versus this kind of wide horizontal approach that has been the general way to do this for the last few years. But now the tools are evolving and companies are evolving to think about this in more of a specific process driven, workflow driven, industry driven way. You talked about expansion. I know, Southern Europe, Portugal, Italy, maybe France. I mean, what's harder to scale? Is it the systems that you built or the expertise to deploy those effectively in new markets?
That's a very interesting question. I probably think the expertise um, is gonna be something that we're gonna be, well, us and all different companies that want to build from an IFRS
Mhm.
perspective. That's going to
Right.
be an issue that we're going to be tackling on the next years. Competition for talent. And one of the things we're doing, for example, is we are um, paying for all the different agents that someone might want in our company, or the cloud codes, or the cursors of the world. And even if it's for like
Mm.
side projects and it's not directly tied to Tuyo, but it's something that's the only way that you can really build AI literacy. And that's something that we want within the people in our company. So that's one of the things we're doing. And yeah, so to answer your question, we think that the people with the skills to take these to other countries are going to be probably the largest challenge.
Yeah. I mean, it does seem like that's been a constraint across a lot of the geos I've looked at for companies. How do we find the right talent to do the things that we're trying to do with these AI capabilities? So again, that resonates very well. One that's all the time we have today. But before I let you go, one of the things I like to do at the end of an episode is ask you to recommend someone, maybe a thought leader, an author, somebody that you follow and that you think the audience would enjoy that would help them. And it could be AI related, or it could just be kind of a general business or life related recommendation as well.
Right. I think the one that I'm going to recommend it's AI adjacent. It's not really AI related, but I think with all the discussion around AI and everything and the way we behave, I think Richard Fowler's books and work in behavioral economics, I think that they are more relevant than at any other time. just to make sure that we can move past all these cognitive biases, or just to understand the way we behave, and maybe even the machine behaves, because who knows?
Right.
Maybe we're passing, and there's a lot of research on this. We're passing our cognitive biases to the different LLMs. So
Yeah, I think that's probably very true. So great recommendation. Thanks a lot. And Juan, thank you for joining today. Really interesting conversation. I love to see, practical use of the tools in a real environment where it really is making a difference for your business. So thank you.
no, thank you for having us.
And that's the show for this week. Thank you all for joining us. Remember to like, share, and subscribe to the show. If you enjoy the show, please leave us a review to help others find us. For more research on AI and other software, check out arianresearch.com. If you're an expert in AI, generative AI, or business automation, either as a provider or an end user, email your information to disambiguation@arianresearch.com. Don't forget to join us next week. Disambiguation is an Arian Research production. I'm Michael Fawcett, and this is the Disambiguation Podcast.